Harvey, what do you think is their angle with trying to corner copper? I've read that possibly they're trying to profit from their monopolizing copper to help defray the bath they're taking in their silver shorts.
That's part, but I believe that they believe that the world is going to have extreme high commodity prices, and I think J.P. Morgan is now busy buying all the commodities. Mm-hmm. So that's what they're doing, and just copper, they realize that's the premier one, it's the one that everybody notices. So they've certainly concentrated on that one. But I think that when you start having position limits, of course, look what happens to commodities. They will rise. They'll really rise, and you can't get a hold of the commodities that you want. So they're giving J.P. Morgan a head start.
Okay,
that's what I think is going on. It boggles my mind to that in front of the entire CFTC commissioners that they admit and they're doing this and they do nothing. I just cannot, for the life of me, see what these guys do. But anyway, that's certainly out there, and they certainly have cornered the market in copper. And you can see copper running to about 413 or 414 or something on Friday.
Right. Well, let me ask you this then. As far as the CFTC and limits go, if we take into account some of the information coming out of Jim Willey's contacts, if we think about some of the Eric King contacts, these guys are saying that their contacts that are basically dealing with these quote-unquote deep-pocketed Asians, and that's just a nice way of saying the Chinese, they're flush with our trashy paper dollars. And so they're going to pour it into gold and silver on every major dip. So even if the CFTC doesn't enforce some sort of controls, okay, and even if, I guess what I'm driving at is that the bankers are in a box, in a corner, all by themselves, and they must be panicked. I love your phrase when you always say the bankers are probably burning the midnight oil tonight, trying to figure out what to do. What can they do? If they knock it down to 22, can you imagine the run on physical that would occur at those prices?
Isn't it amazing? Yeah, and what the Chinese have realized, that they recognize the game that's been played. So every time on a knockdown, they know, and the reason is that huge amounts of contracts are supplied. See, that's how these. I'll try to teach you guys the criminality. The bankers have to send a message to their fellow friends that a raid is going to occur. Okay, so they signal that they're going to do it by on the day before. They'll do a couple trades and a strange bit of numbers and then that says the raid is on. Mm-hmm. Then what they do is collusively the bankers will withhold the bids for guys who want silver and gold on the Friday. And if I'm bidding for gold and silver, and my bank says, you know what, hold off you'll get it cheaper at 1:00. Okay, if it's cheaper. You see, so they withhold the bids, and all of a sudden they whack 100,000 contracts in. That drives the price down, and generally in past times it would just stay there for a week, so damage would be so great. Now the Chinese recognize what's going on. They realize it's nothing but a paper game. So they wait for these down days, and then they're absorbing all these contracts.
Right.
So then all of a sudden, when the bankers have to go buy back their shorts, they're buying back at the same time others are trying to buy for it, and it drives the price back up again. So you'll probably see on Monday morning gold and silver will be much higher. Why? Because the bankers have to try to cover their shorts, which means they're on the buy side. I'll be in on the buy side buying, and nobody is a seller. So the prices rise. So the Chinese have realized that the scam that's going on, so they are in on every single down day, absorbing all these massive contracts. So instead of it taking 2 weeks to heal, we're taking less than a day. Mm-hmm. All right, and that's why the market's recovering, and then they're taking their metal and putting it onto their shores. Mm-hmm. And that's what's going on. London is the volume is contracting so much in London because the Chinese are taking their gold and moving it onto their shore. And so everywhere, everyone, the Arabs, they just don't want it. They don't trust anything in the States. Now the other issue, this is also very important for you guys to know, is when you're seeing that even though the Fed is buying all these bonds, the long-term bond rate is rising. Why? The Chinese are massively selling. They're selling, which is driving the rates higher. they're taking the cash and they're buying gold and silver, whatever they can, and load the boat on the Thames River and up and move it over to their shores.
Well, it's incredible, and Harvey, just I think so. Our new listeners, people that are maybe new to precious metals and are thinking about buying some silver for the first time, just so they understand. Maybe you could explain for us how important was that CFTC hearing at which you testified, and Jeff Christian, really with CPM Group testifying essentially on behalf of the banks, basically let the cat out of the bag and admitted to the entire world that, oh, sure, there's 100 ounces of paper gold and paper silver for every 1 ounce of physical. This is completely rational and normal. Don't worry about it.
Precious metals are financial assets, and like currencies and T-bills and T-bonds, they trade in the multiples of 100 times the underlying physical.
That is correct. And not only the CPM Group is basically in London, so what he says was, that's the physical market. And remember, there were a lot of emails that were going back and forth between Jeff Christian right after this. He was trying to explain his thing, and I said, Jeff, this is what you said. The physical market is 1 out of 100. That's what you said, And then he goes and says that he did this for Barrick. And he says he started in 1986, which is about time. And our records show that the first leasing started in 1988. So that would put it about right. And he started teaching Barrick about how to sell. Basically, it's you're taking your gold in the ground, getting money for it to finance your mines. Okay, and he's the one who stated that he taught Barrick this. So if there's anything, and he describes to me and to Adrian and all the guys that this is the real physical market. We're dealing with 1 ounce of real per 100 ounces of paper. So now you can imagine, let's withdraw that 1 ounce. Can you imagine the bubble of paper that's surrounding it?
Well, yeah, it's fractional reserve precious metals.
That's correct. And yet the real ounces is now disappearing, leaving this whole bunch of derivatives out there, not backed by anything. No, and that's the fear that's what we're experiencing now. And I'm trying to tell the guys that are watching these, the movements in the comics in silver, it just shows that they're in absolute chaos there. 1 million ounces go in, 1 million ounces go in. I mean, it's unheard of what's going on. You never see this, and you never see these massive adjustments.
Right.
You're rare. All of a sudden, these adjustments occur every second day.
Right.
So it tells that the comics is in it, and please understand, this is very important for you, all the guys over there and your listeners. The comics is really not a physical market. The London, the LBMA is where all the physical is done.
Okay.
Comics is really a paper market. Now the problem is when you can't get your gold and silver over London, you are going to come here to New York to get it. And that's what I told the commission. That was one of the questions that Amalia asked me. And I said, is when London is out, they're going to come here, and you'll default. And that's where the crisis will be.
Countries like China and South Korea, Russia, start demanding and taking physical delivery of their gold and moving it offshore to their shores and putting pressures on on the COMEX. And we will probably come to a point in time where we will have a failure to deliver.
If you looked at him, he was laughably stunned when I told him that.
Yeah. This system, which is essentially fairly criminal at this point. I mean, Bernanke is openly debasing the dollar. He says that's his goal. Inflation is going to hurt people. It is going to devastate people on fixed incomes. It is going to devastate the middle and lower class. It's going to hurt everybody.
Correct.
He's openly saying that this is a good thing. It's lunacy. So having said that, if we know that the system is out to hurt us, I find it extremely fascinating that the criminality is so widespread that it's left us with an opportunity. This buying of physical silver, Harvey, this is still a wonderful opportunity for people, but because of the criminality. It's only as cheap as it is because of the fiat dollar criminality. They wanted to prop up the fiat dollars. They shorted physical gold and silver with paper. This has left a remarkable opportunity for everybody. No matter what income level you are, you can save up enough money to buy a silver coin or 2 silver coins. And given the 100-to-1 paper manipulation, Kirby's making the argument that your 1 silver coin in the future might be worth 100 times that.
Well, actually, here's something you guys don't know. Like I asked this You know, I said, was there ever a time in history that the price of silver was equal to the price of gold? And a lot of people say no, and the answer is it was. In 1480, silver, 1 ounce of silver was equal to the price of gold. They were equal. And then all of a sudden, they found more silver on the Potosi mines in Bolivia, and eventually silver went down in relation to gold. And of course, the Guinea mines when they founded that in 1700s, and gold became the dominant. But at one point in time, silver was equal to the price of gold. And by the way, if you equate it in today's price, it was, I think, $780 an ounce. So if you go back in time, like a silver chalice was as valuable as a gold chalice. This is history, you know. So don't think that the price of gold cannot equal the price of silver. The most important thing to know in silver is consumed.
Yeah, the industrial uses.
It's used in the hydroelectric wires. It's used in pharmaceutical. In my industry, it's one of the best for burns. Silver sulfadiazine. It's a wonderful burn product. We're using it as an antibacterial, so it's used in clothing. It's used in washing machines. That's its problem. Its problem is it's used, so it's consumed, you know. And all of a sudden, gold is stored. Every ounce of gold that's been produced is still here.
Yeah, it's an incredible story. So as silver returns to its 5,000-year history as a monetary metal,
yes.
In the meantime, it's been used up.
That's correct.
Which leaves an awful big shortage.
And that's what we're trying to show people, you know. And it's definitely going to happen. You know, you're going to certainly need some silver in coinage, and you know, and there's got to be. It's got to go back. You can't have paper anymore. Once paper is destroyed, you're going to have some semblance of a gold and silver backed currency. In silver, it's can't get it back because it's used already. It's in photography. It's in the hydroelectric. You just can't get it back.
Right.
So that's probably why silver will probably go back to equal to the price of gold.
This concludes part 1. Click here for part 2.